Bitcoin is no longer owned primarily by retail investors. It is owned by institutions at scale. Let's start with the facts. For educational purposes only, not financial advice. Welcome to Epic Money Mindset, the place where ambitious people come to master money, build wealth, and create real lasting financial freedom. At today's Bitcoin price of $88,276, the largest institutional holders control staggering amounts of value. BlackRock, through its iShares Bitcoin Trust IBIT, holds approximately 770,792 Bitcoin. At today's price, that represents over $68 billion in Bitcoin exposure. BlackRock does not speculate. They warehouse assets for long-term capital. Fidelity, through its Wise Origin Bitcoin Fund, FBTC, holds approximately 202,447 Bitcoin. At today's price, that is worth about $17.9 billion. Fidelity doesn't chase trends. They build infrastructure. Strategy Inc., formerly MicroStrategy, holds 672,497 Bitcoin. At $88,276 per Bitcoin, that equals roughly $59.4 billion in Bitcoin value. Here's the part most people miss. Strategy's Bitcoin alone is worth more than the company's entire stock market value. The market is effectively valuing the company at less than the Bitcoin it owns. And Strategy is not just Bitcoin. It also operates a global enterprise software business, generates recurring revenue, and actively uses capital markets to acquire more Bitcoin. That combination, Bitcoin plus operating business, is something many investors are still exploring and trying to fully understand. Grayscale's Bitcoin Trust holds approximately 165,592 Bitcoin. At today's price, that equals about $14.6 billion in Bitcoin value, even after years of redemptions. Other institutional holders include Bitwise, with 38,461 Bitcoin, worth about $3.4 billion. ARK and 21 Shares, with 37,769 Bitcoin, worth roughly $3.3 billion. VanEck, with 15,888 Bitcoin, worth around $1.4 billion. Invesco Galaxy, with 6,108 Bitcoin, worth about $540 million. And then there is Tesla. Tesla holds 11,509 Bitcoin, purchased at an average price near $33,500 per Bitcoin. At today's price, Tesla's Bitcoin is worth about $1 billion. That is not retail behavior. That is balance sheet conviction. Here's why these numbers matter. Institutions do not allocate capital emotionally. They do not chase social media narratives. They do not buy assets without long-term intent. When BlackRock holds Bitcoin, it is not a trade. It is custody for pensions, retirement accounts, and long-duration capital. When Fidelity builds Bitcoin products, it is not hype. It is permanence. When Strategy continues buying Bitcoin, even when sentiment turns negative, it is not speculation. It is a deliberate capital strategy. This changes how Bitcoin is priced. Bitcoin is no longer priced only by retail sentiment. It is increasingly priced by asset managers, custodians, institutional mandates, and long-term allocation models. Spot Bitcoin ETFs did not just add demand. They remove supply. Once Bitcoin enters an ETF or a corporate treasury, it does not trade emotionally. It sits, it is warehoused. It becomes structurally illiquid. This does not mean Bitcoin is risk-free. Volatility still exists. Drawdowns still happen. Leverage still wipes out unprepared participants. But it does mean Bitcoin is now institutionally legitimized, financially integrated, and structurally embedded in global capital markets. Retail investors no longer decide Bitcoin's fate alone. The most important question is not whether Bitcoin is risky. The real question is, why are the largest financial institutions on Earth choosing to own it anyway? Not as a trade, not as a headline, but as a core asset. This is Epic Money Mindset. Stay connected and pass the insight forward. See you in the next one.